Brookfield just had their investor day for 2025 and they promised a lot of growth. I made it for Tucker Alpha Mind, and in this video we are going to deep dive into everything that Brookfield promised during their investor day, everything they explained, and what's the future for Brookfield Corporation, and is this still actually a great buy for your portfolio and in the next 5 years. So let's get started. Let's start with actually a breakdown of what is Brookfield, and in our case, what is Brookfield Corporation, what is their main businesses. So basically, Brookfield Corporation is composed of three main segments, three main businesses that are actually very synergetic in a way. So basically, Brookfield Corporation is an investment company, so they invest money for their clients, and they have these three segments. So the first, the Brookfield Asset Management, then the wealth solution, and then the operating businesses. So basically, so these are three segments. I think that a lot of people, they don't really understand what Brookfield does, because the whole, I would say, corporation structure is quite complicated, but actually this is very simple if you actually drill down into the core essence of what they do, and I think that they explain it very well. So they have Brookfield Asset Management, wealth solution, and operating businesses. So let's start with Brookfield Asset Management. So what do they do? So they basically raise money, they raise capital, and then they manage money for all their investors, and they invest in a different lot of projects into funds, and that's how they actually get returns for their shareholders, for the investors or the limited partners. And on that, they actually have a management fee, and that's how they produce earnings for Brookfield Corporation and Brookfield Asset Management. Then there is the wealth solution. So the wealth solution was basically the insurance part of Brookfield. This is a business that Brookfield Corporation has built in the last few years, and this is basically simply an insurance business. We will see afterwards what it means for Brookfield, because it is different from other regular insurance businesses. And we have the operating businesses. So as you may know, there is Brookfield Renewable Energy, there is Brookfield Infrastructures, which are listed companies, and you also have Brookfield Properties, so basically in the real estate. So Brookfield directly operates a lot of different businesses, which are based mainly on real estate and infrastructures, and this actually generates as well earnings and dividends for Brookfield Corporation. So as you can see, this is a reminder of what Brookfield Corporation does. So basically, it invests money, it generates returns, and then basically operates infrastructures, operates businesses, and then returns money to shareholders. So have we seen the main business of Brookfield is basically gathering and aggregating capital to invest it and to generate returns. And so that's also why, as a shareholder of Brookfield Corporation, you are part of this whole scheme, and you will benefit definitely from the operation that all the different Brookfield entities operates. But what is very interesting as well is that Brookfield has both public holdings and private holdings. Public holdings are like companies like Brookfield Asset Management, which are listed, or Brookfield Infrastructure, for example, BIP. And you have also private holdings. And in this latest investor day, Brookfield actually had a deep dive into their different private holdings and how they are valued. So they have different type of private holdings, as they say. They have their direct investment into the different funds that Brookfield Asset Management is managing, and they have carried interest, so meaning like the share of the profit which belongs to Brookfield Corporation. And you also have like the different direct operating businesses that they have, especially the real estate business, which is actually one core of legacy private holdings that they have. Brookfield Corporation has a mix of public and private holdings that are today currently valued by Brookfield Corporation at around $102 per share. And what we can see today is that at the very moment, so the Brookfield Corporation shares are quite undervalued if we compare to the planned value that Brookfield is actually giving its investors and what we have seen at the different investor days. So it's actually a 35% discount at the time of the investor day. And they mentioned that still today, not talking about the next 5 years, the shares of Brookfield Corporation are already discounted, already cheaper than what is the real value for Brookfield Corporation. So now that we have seen what Brookfield Corporation is and what is the worth of Brookfield Corporation share as per the management, so basically now we are going to see what they announced during their Investor Day 2025 and how they see Brookfield growing into the next 5 years. So the first thing which is very important is that Brookfield Corporation has a lot of different tailwinds. We have already made a video on this. We're going to put the link here. And basically, Brookfield Corporation has four main tailwinds which are going to actually drive their growth into the next 5 years. So the first one is actually the need for retirees to actually fund their pension and fund their retirement. And what they are saying is that alternative investments, which are the main actually focus of Brookfield Corporation and the Brookfield ecosystem, is going to get into more and more individual people, pension funds, or pensions, I would say, meaning 401k, individual retirement accounts in the US, but also globally. So basically what Brookfield is mentioning here is that historically they have taken money from institutions, so from banks or from pension funds, for example, and now as a lot of different, I would say, private equity firms, they are target individuals because there is a lot of demand from individuals, especially wealthy individuals, to actually fund their retirement at attractive rates. And that's what Brookfield is actually providing. This is actually a second tailwind with Brookfield Wealth Solutions. So this is a business that they have built in-house from the ground up. They have obviously made some M&A to actually acquire insurance companies, but the fact is that they have built this Brookfield Wealth Solution, and this is what is going to actually drive their growth. So we will see like why, but the simple concept is that Brookfield Wealth Solution is going to actually get a lot of capital from its insurance business. So this is what we call the float, same as Warren Buffett. And the idea is for Brookfield to invest this money that is actually underlying the insurance business to generate superior returns and generate what we call a spread. So basically, Brookfield Corporation is going to keep the money between their investment and what they give back to the insurance policy holders. And so this is actually a very good business. We have seen that with Berkshire Hathaway, and definitely this is going to lead the growth. And this is what Brookfield is telling us. This is a generational opportunity for Brookfield to actually build this business and get more and more capital to actually invest through Brookfield Asset Management, for example, to generate fees. And so this is going to drive earnings for Brookfield Corporation going forward. Third tailwind for Brookfield Corporation, and we have already made a video on that, is basically AI infrastructures. And they are repeating it. They are going to actually benefit tremendously with the build out of data centers and what they call AI factories. So Brookfield Corporation is providing the financing, but also the expertise in terms of power generation, renewable energy, building data centers, making deals, basically structuring all of this financing, because these are multi-billion-dollar projects, and actually Brookfield Corporation has the expertise to make this type of infrastructure deal and infrastructure investment, but also gathering investors to invest into these different projects. So AI infrastructure is going to be a massive driver for Brookfield Corporation going forward. And the last tailwind that they are mentioning, and which is very true, is that with declining interest rate and the recovery in the real estate sectors, there is going to be a lot of monetization going forward for the real estate business. What does it mean? It means that Brookfield is going to be able now to sell their assets in terms of real estate and to get the money back on their investment and to basically generate more earnings from that. So this is basically what we call the realization. And definitely what we are going to see is that Brookfield is going to actually change their business model. This is what they are saying. They're going to focus more on the insurance part and the asset management part, and they are going to try to get the most value out of their real estate portfolio. And as well, with declining interest rate, it will be easier to actually finance or refinance for Brookfield, and also it will ease the different monetary transactions that they will have in terms of M&A when they want to sell these different assets. So these are all the main tailwinds that are going to drive Brookfield Corporation growth in the next 5 years. But how does it translate into the numbers? I want you to remember two figures, 17% and 25%. Why is that? First, Brookfield Corporation is telling us that their current businesses, they are going to be able to generate 17% growth CAGR over the next 5 years, only in terms of distributable earnings before any realization of carried interest and basically monetization of their different assets. This is very important because this is their operating businesses, and this shows that all these tailwinds that we have mentioned before, they are going to drive their current business, and their current business with Brookfield Asset Management and Brookfield Wealth Solution is going to actually grow earnings tremendously. This will definitely reach the target of return to shareholders of 15% plus over the long term. And what they're mentioning is that distributable earning before realization is going to grow by 17%. But that's not it. So what they are mentioning, and I think this is very important, a lot of investors are not seeing that into Brookfield. What they promise is that they're going to be able to generate 25% CAGR over the next 5 years in terms of earnings. And when we say earnings, we mean distributable earnings before realization from their current businesses, realization, and additional capital allocation from the different activities that they're going to have to reallocate capital into different areas. So why is it important? Because they're going to grow distributable earnings before realization by 17%. Then they're going to have carried interest and realization, which is going to add 3 points. So what they're mentioning is that distributable earnings should grow by 20% on a year-over-year basis over the next 5 years on average. And this is from the businesses. And basically, they think that they're going to be able to generate 5 points of growth more, basically thanks to a better capital allocation and the money that they're going to generate from different monetization and that they are going to reinvest into the business, or they're going to repurchase shares. So what they actually show on the slide and what they presented into their different investors, and I think that this is the most important thing to keep in mind, is that if everything goes according to their plan, they're going to be able to generate 25% compounded gross earnings over the next 5 years. So, which is actually pretty incredible. And if this really happens, definitely the stock price is going to follow. And how do they see that actually translate into their planned value, so the value that they see for Brookfield Corporation? So today we have seen that the value that they are seeing is around $100, and what they're mentioning is that in the next 5 years, so they are seeing the planned value for Brookfield Corporation to go up to $200. And so definitely what this means is that the stock should actually double in the next 5 years if the value of the company is actually doubling into the next 5 years. So we are not discussing too much about the share repurchases, because to be very honest, the share repurchases for Brookfield Corporation, it is very opportunistic, but this is not actually a material impact for the stock price. They repurchased shares, but they just added $2 over the stock price. So I think that this is good, but this is not very material. What is very important is that they are going to be able to accumulate more and more capital to invest for the different investors, either institutionals or individuals, and that they're going to be able to generate tremendous growth in terms of earnings. So distributable earnings from their current businesses before realization of carried interest, for example, by 17%. They are going to be able to actually generate more and more what we call carried interest, meaning like the profit that they should earn from the different funds that belong to Brookfield Corporation as actually a top-up on top of the management fees. They value their carried interest at $34 billion at the moment, and they plan to surface basically, I think, around $25 billion over the next 5 years in terms of carried interest from the different funds. So definitely is going to add up to the different earnings over the next 5 years. And on top of that, they plan to actually allocate capital that they're going to surface even more to generate even more earning growth over the next 5 years. So just to say that everything which has been presented during this Brookfield Corporation Investor Day is actually very, very good. And it seems too good to be true, to be honest. The reality is that Brookfield Corporation is a very levered entity. So if there is actually a huge downturn in terms of economy, Brookfield is going to be hit, just like the Apollos or the KKRs of the world. But the reality is that if the monetary policies remains unchanged from the different central banks, and that the economy survive over the next 5 years, so you have a very compelling story with Brookfield Corporation, definitely. Having said that, what's my own takeaway? So just for disclosure, I own Brookfield Corporation shares, so this is not financial advice, but everything that they've presented looks very good. I think it looks like an opportunity today, even at the current share price. I would say that it's always good to be patient, to look for pullbacks, because the stock has been on the rise over the next few months, a bit like the whole stock market. Just to remain on Brookfield Corporation, and as we mentioned in a previous video, has a lot of tailwinds. It has a lot of tailwinds from AI. It has a lot of tailwinds from retirement needs. It has a lot of tailwinds from declining interest rate environment, and they are going to benefit tremendously from the current policies that we are seeing, as well from the different tailwinds that we are mentioning, especially from AI. So definitely, I think that Brookfield Corporation is a wonderful company and it has everything for it. So I think that if everything goes to plan and if there is no huge drawback in the economy, definitely Brookfield Corporation has a huge chance to actually double in the next 5 years. Obviously, this is not something which is set in stone. And a lot of things can actually go wrong, but if they execute properly, definitely we will see the stock price follow all this growth in terms of earnings. So I think that you should do your own due diligence over Brookfield Corporation because I think that this is a great opportunity today in the market. It will compound over time. It's not going to be a stock which is going to double overnight. I think that it will take time for the stock to actually double over the next 5 years, because the doubling is going to come not from undervaluation, is going to come from the growth of the earnings. People are going to realize that Brookfield is going to actually raise more and more money, and from all this money raised from institutions and individuals, they're going to get more and more fees. They're going to be able to generate even more returns for their shareholders. And basically, what we are going to see is that definitely Brookfield is going to be a huge opportunity going forward. So if you're interested in other analysis like this one, please check my other videos. Please tell me in the comments, what do you think about Brookfield? If you think that it's actually a great opportunity. Also, if you like my channel, please subscribe, and I see you in another video. Bye.